The information is everywhere. You can go anywhere online. You can pick up your phone, you can look at Instagram, and you can look at YouTube, and you can look at anywhere, and you can find financial advice for business owners. Heck, everybody has an opinion. That's the good news. The bad news is most of that advice is not very good. So today, what I'm going to talk to you about is 5 financial things that I see that are complete myths, that if you're a business owner, if you're an entrepreneur out there, you need to watch this. Because I'm going to tell you right now, it's not always about doing the right things. Heck, sometimes it's just about avoiding the wrong things. And that's what we're going to talk about today. If you're new around here, my name is Jacob Turner. I'm a former Major League Baseball player, and I'm the founder of Moment Private Wealth, a financial planning firm that specifically helps athletes and entrepreneurs build and protect wealth. I think I have a really unique perspective on this. And the reason for it is simply this. One, I've been pitched really everything under the sun. When it comes to baseball, there was a lot of people pitching me things, and we're going to talk about some of that today. And then secondarily, I've had a front row seat of not only building a business, but watching other entrepreneurs that we work closely alongside build $1 million businesses, heck, $100 million businesses. And what we try to do is make sure they do the right thing and avoid the wrong thing. And guess what? In this video, I'm going to tell you about the 5 things that I want you to avoid as a business owner. Number 1, the tax write-off. Now, every business owner has heard this before. They've been like, I'm talking to a friend and I was making a lot of money, and he told me that he was able to take a write-off and he was able to buy the car, the plane, whatever the cool thing is. He's like, yeah, because it helped me save money in taxes. Now, I have good news and I have bad news for you. Yes, it does help you save money in taxes if you can do a business write-off like buying a car in your business. No, it did not actually help you save real money. And the reason for that is you got a tax deduction, not a tax credit. So let's do a little bit of math together. Let's say we're in the 37% tax bracket and we get to the end of the year. We've had a banner year. We're making millions of dollars and we have so much money in our cash account for our business. We say, you know what? We can buy another truck in our business. It's a $100,000 truck. And we're going to be able to take a $100,000 deduction in year 1. Just for easy math, let's say we were able to do that. That means we're going to be able to get a $100,000 tax deduction. Well, at the 37% tax rate, that means that saves us $37,000 in taxes. That's the good news. The bad news is you still spent the other $63,000. So one of the biggest myths I see on the internet is because you make money, we have to spend money. Heck, I've had business owners come to us and say, well, in previous years, my CPA said, you're having a great year, so we need to go out and buy stuff to save money in taxes. I was just at the car dealership 2 weeks ago, and literally the salesman said, and as a business owner, you probably know this, but once you get to the end of the year, it's a great way to save money on taxes by buying a new vehicle. And I did not have the heart to tell him that I was a financial planner and that what he was telling clients was in fact wrong. But I am here to tell you that it is in fact wrong. So if you're a business owner out there, understand a tax write-off can be a good thing, but you are still spending the money. Okay, you're not getting a tax credit. It's not a 1-for-1 situation here. All right, the second big myth I see, and I think this stems from a lot of the business owner, entrepreneur type organizations. Now, I'm not going to throw any of these organizations under the bus, but what I'll tell you is if you go to any of these organizations, typically the first thing that they want to know is, what is your revenue? What is your revenue means what is your top line? And I'm going to tell you right now, your top line doesn't really matter. Now, okay, it matters a little bit, but it doesn't really matter because what really matters is what is your bottom line. Okay, your top line is just what you made in revenue. Your bottom line is what is actually going to hit your bank account if you pulled it out of the business. So you tell me what matters more. The business owner that's making $10 million of top line, but $500,000 on bottom line, or the business owner that's making $2 million of top line and $1.1 million of bottom line. Which one do you want to be? If you're anything like me, I'd rather be the guy making $1.1 million of bottom line and not $500,000 of bottom line. And I think this is a huge myth and a huge mistake that business owners make. We get in hyper growth mode because we see around us all these organizations, everybody's promoting what they're doing. How much are you doing in ARR? How much are you doing in top line revenue? It's almost this like braggadocious way to say like, this is how cool I am. This is how great my business is. Well, my friends, we need to check our ego at the door. And the reason for that being is we need to build a business that's a great business. And the fact of the matter is a great business produces a profit. A great business does not just have a giant top of the line number. So if you're out there running a small business, you need to understand not just what your top line revenue is, but even more importantly, you need to understand what your bottom line revenue is. And we need to check our ego at the door as business owners and say, just because this organization says that we're going to promote what everybody's top line number is, what really matters is what is your bottom line number. Because remember, you're running a business, You're not out here to try to brag and make somebody say, oh my gosh, I can't believe they're making so much in top line revenue. It doesn't really matter. Number 3. All right, so we had to check our ego at the door. And number 2, we're gonna have to check our ego in the door at number 3. I see a lot of things online about business owners going all in. Oh, I went all in, and I went all in again, and I went all in again. And heck, we have story after story. I mean, Facebook's probably the greatest example recently. Mark Zuckerberg turned down $1 billion, I don't know, 10 plus years ago, and now they've built this thing to this $1 trillion plus business, and it worked out great. And there's example after example of business owners doing this, where they went all in, and then they went all in again, and then they went all in again, and then they went all in again, and now they're on the Forbes billionaire list. I am here to tell you, there is a graveyard of business owners that have tried to do that same path that you will never hear about their names because their businesses do not exist anymore. So if you are a business owner, again, we need to check our ego at the door a little bit here and say, what am I really trying to accomplish in my own life? Am I trying to get on the Forbes billionaire list? I know for me, I'm certainly not. I'm trying to build a great business to be able to support the clients that we serve, to support the teammates that are on our team, and to support my family. I'm not trying to be on the Forbes billionaire list. And what that means is we need to check our egos at the door, and we need to start with the end in mind and say, what are we trying to accomplish? What is our goal? And our goal should not be to try to impress somebody else based on us going all in over and over and over again. Heck, for me, I'm trying to build wealth outside of my business to continue to diversify, just like I tell all my clients to do. And it's not because I don't believe in our business. I just know the odds. I know what the graveyard looks like because I get to see a front row view of entrepreneurs that are building incredible businesses, but I get to see the ups and downs on a yearly basis. Even if they've been doing it for 5, 10, 15, 20 years, it is never a straight line trajectory up and to the right, and it is never easy. So if you're a business owner out there, we need to check our ego at the door, and we need to understand that going all in over and over again, it might sound cool, and it might be cool in Silicon Valley, but chances are for your small business, it's not the right thing to do. Number 4, and this one is going to disappoint a lot of you, that you can own a business and then you can pay no money in taxes because the rich pay no money in taxes. Well, if you want a deeper dive into taxes, I've done plenty of videos on taxes. You can go check them out. What I will tell you is nobody pays no money in taxes. Now, there are a lot of people out there that can reduce their tax bill based on certain things that they're able to do. But what I will tell you is those people are also really focused on certain areas that happen to have big tax benefits, the biggest one being real estate. I will tell you this. Just because you are making a lot of money does not mean that you're going to pay no money in taxes. And in fact, I've seen way too many business owners buy very complex products that have very high fees that are very hard to get out of simply to try to save money in taxes. And in year 1, they felt really good about it because on their tax return, they were able to see the benefit of this. But in year 2, 3, 4, 5, when they actually wanted to access that money, when they actually wanted to use that money in their life, they were pretty disappointed that they weren't able to do that. And that's true for a lot of things that have to do with taxes. Most tax strategies that are out there for business owners, contrary to what you will find on Instagram or on YouTube, are simply deferring taxes until some point in the future. They are not avoiding taxes. So if somebody's out there telling you, I'm a business owner and I don't pay any money in taxes, just remember, at some point they're probably going to pay money in taxes. They're simply deferring taxes, and chances are they might be playing a totally different game than you. So I don't want any business owner to overpay in taxes, but taxes are just simply one part of the equation. They are not the entire equation. So if you're a business owner out there, do not make your decisions strictly based on you paying taxes versus you not paying taxes. All right, and number 5, and this kind of ties in with our taxes, is everyone should buy real estate. Heck, you're a business owner, you're making loads of money, just start buying real estate because you're going to get the tax benefits. It always goes up in value. It's a great investment. Probably heard that pitch before. If you haven't, you're going to hear that pitch. And I'm here to tell you that real estate can be a great investment. Now, notice what I changed there. It can be a great investment. But what you need to understand is, just like anything else, there is a whole subset of people whose sole job is real estate. And they are 100% laser focused on finding the best properties and the best building at the best prices. And if you want to compete against them, you just need to understand that you are competing against people that do this as their full-time job. So if you're a business owner out there and you're running a business that's outside of real estate and you want to buy real estate, that's fine. But you need to understand that you are competing against people that it is their full-time job. So if a building comes to you, the question that I want you to ask yourself is, say, if this building is such a great deal, because I'm going to tell you right now, I love real estate agents, but every real estate agent is going to tell you, this building is a screaming deal. You got to jump on this. It's going to sell fast. And I would just ask them, well, then why is it coming to me? Because I'm really new to this thing, and shouldn't the professional, the guy that's doing this 100 hours a week, already know about this deal, and chances are he did know about that deal, and chances are he passed on that deal. So I'm here to tell you that if you're a business owner out there, real estate can be a great investment. It does not mean you have to buy real estate. In our business today, we own no real estate, and that's because I want to keep it simple. It's not my daily job. It's not my 100% focus. In the future, maybe we'll own a building. I don't know. But right now, we don't own one, and I'm okay with that. So just because somebody else is doing it does not mean you should do it. Now, if you're a business owner out there, so much of doing the right thing is just avoiding the wrong thing. These 5 things are 5 big pitfalls that I see. We work specifically with business owners, a lot of high net worth and ultra high net worth business owners, to make sure that they can maximize all the sacrifices they made in their business. Because if you're anything like me, you've put a lot on the line to build your business. And I want to make sure that you are getting the most of it. That's what my channel is all about. It's helping you get smarter with your money. So until next time, my friends.